So, the experiences in Africa and elsewhere have shown that there could be a link between oil wealth and underdevelopment, poverty, environmental, social and economic challenges. There is also abundant literature that suggests that oil wealth can be transformative if the structures for good governance are embedded in a political economy of oil development. This is Business Live, and today our focus is on the oil and gas sector. My name is Abigail Adamagunchi. Stay tuned. Welcome to your most authoritative business news analysis program. Here we take a critical look at pertinent issues affecting businesses and the economy at large. A look first at our business news roundup for today.
The car power barge from Turkey to augment Ghana's electricity supply situation has arrived in neighboring Ivory Coast. Joy News has learned the 225 megawatts power plant would be taken off the vessel on which it's been traveling and towed into Ghana by tugboats in the course of the week. The arrival in Ivory Coast marks the first leg of the barge's journey to Ghana, where it is expected to add 225 megawatts of electricity to the current stock. Director General of National Development Planning Commission (NDPC), Nimoy Thompson, has called on Ghanaians to adopt positive attitudes to ensure the successful implementation of the 40-year long-term National Development Plan. He said the ultimate goal of the development plan was to ensure social and economic transformation of the country, and there was the need to adopt a scientific approach in resolving issues militating against the development efforts. Government has cut its 2016 expenditure on the agricultural sector by 40 million Ghana cedis, despite growth in the agricultural sector stalling to 0.04% this year, when government had targeted 3.6% growth. This year, government's budgeted expenditure on the agricultural sector is 395.19 million Ghana cedis, while for 2016, 355.40 million Ghana cedis has been budgeted, indicating a 10.1% decrease. Economist Professor Peter Quartey has backed government's decision to hedge the interest rates at which the country borrows from the international market. For the debts government has contracted, it is to pay about $4.4 billion in 2016 in interest payments alone. As a percentage of domestic revenue, debt service has almost quadrupled between 2009 and 2014. Professor Quartey tells Joy Business hedging interest rates would save money for development. Government will on Monday, November 30, 2015, issue a 5-year treasury bond. The move is in furtherance with Bank of Ghana's issuance calendar for Government of Ghana securities for the half-year period between July and December 2015. The instrument, which will be Ghana cedi denominated, will be issued at par and will be open to both local and foreign investors.
Those were some business news stories making headlines today, and let's talk more of oil and gas. And the Made in Africa Oil Governance Summit, currently ongoing, is discussing how government is managing the oil the country discovered 5 years ago. Discussions are focused on the missing link between the oil wealth and development. Petroleum Minister Emmanuel Kofi-Boah intimates efforts to make the local content bill practical, among other policies, is a sure way of ensuring Ghanaians benefit from the oil find.
The key thing about local content is how to build Ghanaian capacity to make sure that ultimately it is Ghanaians that are in the forefront of the industry, whether it's personnel that are working in the industry, whether it's goods and services that are being used in the industry, whether it is a lot of other equipments, whether it's Ghanaian SMEs that are winning major contracts because they have the capacity to deliver those contracts. And so one of the things that I've talked about is the strategic focus on government to make sure we build those capacities to match these policy initiatives. And we've talked about the policy initiatives that we have really building capacity of our institutions of state that are responsible for ensuring that the oil industry is following the rules, playing by the rules. We are also building capacity with our educational institution, making sure we are producing the right people to be in the right positions. And we are also building the capacity of SMEs with establishment of enterprise development centers and other things that we are doing in terms of training for SMEs to make sure that Ghanaian SMEs are winning contracts. It's not simply partnering with foreigners and fronting. We are saying that we want Ghanaians to ultimately be the ones winning those base contracts. And the argument is that if in the next 5 years, $10 billion is going to be spent in Ghana in the upstream sector, our question is how much of that money will stay in Ghana and help build Ghanaian wealth? That's the key.
Key issue raised at the summit is whether or not the Petroleum Exploration and Production Bill currently before Parliament is ready to be passed into law or has to be reviewed. The Executive Director of Africa Center for Energy Policy, ASEP, Mohammed Amin Adam, tells Joy Business the bill, as a matter of urgency, must be reviewed.
I mean, of course, as you listen to the various speakers, without governance, oil will become a curse. And we're not just talking out of a vacuum. Experiences from other countries, where in spite of the fact that they got so much oil boom, they did not put in place the governance structures. They did not have institutions, they did not have accountability mechanisms, they did not have mechanisms for disclosing how much oil they are producing, how much revenues they are generating, and how they are even distributing the wealth. The result has been that oil became a curse in those countries. And this is why the frontier countries, the countries that are emerging today, that are making discoveries of oil, want to take a different path, a departure from the past, by putting in place the necessary governance frameworks. They want to now award oil contracts through an open and competitive process. They now have a law which requires the government to publish how much oil is being produced, how much revenues they are generating, and also to publish where the money is going. And so if we have these structures now coming up as a result of the lessons we have learned from the past, then it is emphatic that governance is the missing link.
Right.
And so where you do not have good governance, the resources will be dissipated, the resources will be wasted, there will be so much corruption, rent-seeking behavior. And so it is important for African citizens to continue to put pressure on our governments so that our governments are compelled to manage these resources in our interest and for the benefit of our people.
Right. From where you sit, ASEP, do you think that 5 years on, the minister said that we've done a lot in terms of making the oil, whatever money we are getting from the oil sector, transparent? Do you agree?
And as you heard me, I said that, yes, we have done a lot. We have a Petroleum Revenue Management law in place. We have the Petroleum Commission law in place. We have the local content regulations. We have the necessary laws we need. And they have very good governance standards and principles in these laws. But one thing is having the laws.
And implementing it.
Is implementing it. And so we in civil society will continue to monitor how these laws are being implemented. Because if you have the laws by themselves will not translate oil to development. The laws by themselves will not move oil from being a curse to a blessing. It is how you effectively implement, of course, with citizens' participation in decisions on how you utilize the resources that are generated from the exploitation of oil. And so if we cannot do that, then of course we cannot say that we are doing well. And so 5 years on, we have the laws in place. But the next 5 years should see how oil would translate into benefits for our people by the effective implementation of the laws.
He also spoke about local content participation and what they're doing. What do you make of the plans he put in place?
I mean, the local content regulations are okay. We have problems with a few provisions in the local content regulations. For instance, I think it's Regulation 4, Sub-Regulation 4, which gives the minister the power to reserve a minimum of 5% equity for indigenous Ghanaians in every license. This by itself is not a problem, but the sub-clause or sub-regulation then gives the minister the power to decide persons who qualify to hold this minimum equity. This is a blank check given to a minister to ensure that his friends and functionaries of the government and the governing party are those who will hold a minimum equity in petroleum license. And when you do that, that is corruption. That is rent-seeking behavior. And so we are keenly following how the local content regulations are going to be implemented in order to provide a level playing field for all Ghanaians to participate. You don't need to have a party card before you get a job in an oil company. You don't need to have a party card before you get shareholding in an oil contract. And so, yes, the local content law is good. There are challenges, but together we can work to ensure that we implement it devoid of what happened in other countries. You know that Nigeria and other countries, right, where citizens of those countries are paid agency fees just to hold a stake in order to satisfy the local content requirement. Whereas indeed, those citizens are not getting any substantial benefit. They are just fronting. Okay, shadow companies. Sometimes ministers and politicians will go to secret jurisdiction, register their companies, and bring those same companies back here and award oil blocks to them. That we should not entertain. And this is why we are encouraging government that the Petroleum Exploration and Production Bill, which is before Parliament, provides for open and competitive bidding. But the same bill gives the minister the power to veto the outcome of an open and competitive process. That is not good for Ghana. Okay, other countries have other mechanisms to address challenges as a result of companies who are selected through a competitive process not having the necessary capacity and financial ability to be able to carry out their minimum work program. For instance, Angola, okay, which is not noted for transparency. They have a very good system that they don't veto the outcome of an open and competitive process. They open the second time for competitors to come in. And so they keep doing that until they get a company which has the capacity technically but also financially to exploit the resource. Ghana must copy the Angolan way. Even though we are a democracy, far higher than what Angola is, they have a good practice that we should adopt in our system. Right. And so we are calling on parliamentarians in Ghana to critically review the Petroleum Exploration and Production Bill. It doesn't have provision for the disclosure of beneficial ownership information, and that is bad for Ghana. So they must critically review this bill and ensure that the mechanisms that will, deter people from corrupting the process of acquiring, oil blocks, are put in place in this law so that we can protect the integrity of our oil wealth.
Dr. Mohammed Amin Adam there with my colleague Etanam. Say we're still gathering more thoughts on how beneficial Ghana's oil discovery has been to Ghanaians, and energy expert Theo Achampong also shared his thoughts on whether or not government is managing the oil revenue well enough, and moving forward how we can ensure that Ghanaians fully benefit from the oil revenue.
In terms of how I make of where we are as a country 5 years down the line, I partly side with the line of thought that it is a governance issue. Because if you do recall, in 2008, a year after we discovered, the oil, there was a big forum at Game Power where everyone was like, okay, we need to make this resource a blessing and not a curse. And we did, in a way, rushed through with the development, and so we encountered a number of challenges. And then fast forward 3 years down the line from 2012 to now, it's as though we never really had oil coming into the economy. But that's because of a number of things. One, the country became middle income, and suddenly they could not get access to a number of the concessionary financing that they used to get before. And so what's happening now is that aid inflows have dwindled, and your typical money that would have come from an IMF or World Bank or any other such multilateral body has also dwindled because you're now a middle income country. And so what's happened then is that the oil revenues have basically substituted for the loss of the monies that would have come through the multilateral sources. That's one dimension. There are other dimensions to deal with on the governance side. For example, the EMP law, we know the old law isn't fit for purpose. That notwithstanding, we have still passed as much as 8 new agreements under the old law, whereas we have a new EMP bill 6 years in the waiting, and we still haven't passed that. So there are a number of different dimensions, different facets to this, but critically it does boil down to the point that we do have major governance issues and challenges to address. I do concede, though, that the Petroleum Commission, the new regulator, is doing its bit, but a lot more needs to be done to ensure that in another 5 years from now, we would not be sitting here talking about the same set of issues. We will be talking about something else.
Talking about the petroleum and exploration bill that's currently before Parliament, I don't know if you've taken a good look at it, but there are some analysts who are calling for a review before it's passed into law, that there's a portion that gives too much power to the minister. Have you taken a look at the bill?
Yes, I did read the old one, not the current one that we have, and I was amongst a number of the people who actually voiced out such concerns that if you look at the way the law is structured, and indeed most laws in Ghana, you have a lot of veto power being given to one man at the top, which is the minister, and by extension, the government or the cabinet. And so when it comes to decision making, and when it comes to things like bidding for contracts, you could more or less have this man just basically veto on the basis of some, discretionary or arbitrary rules. What we are proposing was that this has to go through the Petroleum Commission process, and once they have said yes, they've done their technical evaluation, they've looked at the bids program, they look at how many, for example, 3D seismic the company wants to shoot, and they've done the financial due diligence and competencies, then that shouldn't really allow, there shouldn't be that much room for the minister to then now come and say, oh, I disagree, or I don't like this company or that, because sometimes they even may have a political affiliation to, for example, an opposition party or not. So yes, I side with those concerns, and I have, in my own way or the other, voiced those concerns to other people to say there's just too much discretionary power being given to the minister as the bill stands. If you look at the nature of the industry now in Ghana, the production volumes are quite small. And so if you look at you mandating, for example, initially attaining 90% local content by 2020, that's impossible because it fails to take into account the value base of the economy, it fails to take into account the absorptive capacity of the economy. And so yes, you might pass the law, you might have all sorts of regulations in there, you might have all sorts of benchmarks, but when you then do an ex-post analysis, you would realize that you've deviated from that benchmark because you did not take the fundamentals into account.
The discussions rages on at the Maiden Africa Oil Governance Summit ongoing currently. We'll bring you more from the summit, but we'll take a break now. When we return, we'll be talking stock and commodity markets. Don't go away. Welcome back to Business Live, and as I said, it's time for the stock and commodity market analysis, and I have here with me Bertha to do the analysis. How are you doing?
By God's grace, I'm doing very well.
Well, we thank God. I'm also fine, by God's grace. It's been a good weekend with Adum Praise.
Wow.
Let's talk about the market, and looks like something interesting is happening. Seeing the financial, index gaining and the composite index also losing, but the whole market cap, it has gone down. Can you explain what's happening?
Yes, last week we saw more equities gaining as compared to the losers in the market. We saw about 6 out of the 37 listed equities adding up to their previous week open values, and then more of it was financial equities. So we saw that marginal. You see that it's very marginal. There's 0.01%. But when you look at the major index, you realize that it dropped marginal as well. We saw only 2 equities losing, and that was BOPP, Benz Oil Palm Plantation, losing about 37 pesos. Right. And then we saw ETI. ETI lost just a peso. And when you look at just peso loss, it has about 5.96 billion market cap on the Ghana Stock Exchange. But when you look at previously, it was around 6 billion. And because of this peso loss, it came down to 5.9 billion Ghana cedis on the exchange. And if you look at all the listed equities on the market, apart from Tallow and then Anglo Gold that have very large caps, we have ETI also recording a very huge market cap on the market. So a plus or a minus in such an equity on the market drives the entire market down. That is why we saw that marginal shift in the financial stock index, because we saw more financial equities gaining, and then we saw the major index, the composite index, dropping marginally because of the major loss in ETI.
But can you say that the markets did well over the week with this?
Well, it is not impressive
because
even when you look at the total volumes of shares that exchange hands on the exchange, we saw it going down by 67.68%.
Right.
Last week, or let me say the prior week or previous week, we saw a total of over 4.06 million shares exchanging hands. But as at the close of last week, we saw the total shares that traded on the Ghana Stock Exchange closing at 1.3 million shares. And that gave us the value as well dropped, because we saw less equities trading as compared to what we saw in the prior week, and that gave us a lower value as compared to what we saw in the previous week. So we saw the value also at 1.5 million Ghana cedis. And then when you look at the major indices, the current level for the composite index and the financial stock index, it came down by 0.34 points for the composite, which measures the entire market, and that was it's now at 1,903.12 points, and the financial stock index is at the financial stock index is at 1,903.12 points, and the major index, that's the composite index, is at 1,972.64 points, going down by 1.45 points on its previous level. So that's but in general, the market was not that positive, because liquidity was low. The value of the exchange went down, like you said, by 208.26 million Ghana cedis. And that should not surprise you, because ETI has a huge market cap on the exchange.
But looks like, well, there are still some gainers. I'm seeing EBG, CAL, TVL.
Yeah, last week we had 6 equities gaining, but out of the 6, we had these 3 equities closing as the top gainers. TBL is the Trust Bank Limited, the Gambia. It's a bank in Gambia, but it's listed on the Ghana Stock Exchange. It added 2 pesos to its previous closing price, or its previous quote, to close at 37 pesos per share. And that gave us a change of 5.71% on its previous quote. So it closed as a top gainer. But in absolute terms, like in cedis, we saw Standard Chartered Bank closing as a top gainer, adding 5 pesos. Sorry, EBG added 9 pesos, and the Standard Chartered Bank added 5 pesos. Now, EBG closed as the second top gainer in terms of percentage changes. It added 1.28% to its previous price, and it closed the week with a unit share at 7 cedis 12 pesos. It's also in a rally now. EBG is doing well, and we expect it to still make more gains on the market. The financials were very impressive.
I'm seeing CAL, very interesting.
CAL is a very liquid equity on the market. It added a peso to close at 80 pesos per share. But one thing, it mostly closed as a top most traded equity in terms of volume, but we don't see that consistent price appreciations on the market. But if you want something that is very liquid, that you can easily buy and sell off within a short term, then you can look out for CAL, because it's one of the most liquid equities on the Ghana Stock Exchange, and it added a peso to its previous price.
Right, let's look out for CAL. Viewers, if you are watching, CAL is
just a little bit about BOPP before we go on. BOPP had their third quarter financials and audited financials released recently, and when you look at the profit margins, we saw they recorded a net profit, that's a profit for the whole year, the first 9 months. But when you look at it on year-on-year basis, there was a drop of about 34%. And that they attributed to the world commodity prices dropping. Crude palm oil has also dropped on the international market, and that has also affected them. And then the cost of their raw materials also went up more than 70%. And that also, when your expenses go up, your profits comes down. And one strategy that BOPP actually adapted to actually make profits this third quarter was was that they didn't look at, they have their own source of palm where they get their fruits from.
Right.
But this time they had to go to several markets to be able to get the demand that they wanted, because it's not like they were getting, and it comes in seasons. This is not a season for them to easily get the fruits. So they had to go to several local markets to be able to get the fruit, which definitely will be at a higher cost than buying it at one place.
But generally, what's the outlook for the stock markets? Looks like, you know, it's not being
let me
stable.
say, the stock markets, the last days before the end of the year is not that positive. We're still going to see the major indices recording negative year-to-date returns.
Any particular reason?
Because our macroeconomic indicators are not
the same reasons,
are not stable. Most companies did not make very good profits this year or the first 9 months. Some made profits, but when you compare it on a year-on-year basis, you realize that they made the profits declined, and this is one thing that also drives the price of the market on the exchange. So it's like the energy sector too. We still even in the doom, so and most people are incurring more cost. And when you look at the interest, or let's say the enthusiasm that investors have for the Ghana Stock Exchange is lower as compared to the willingness or the enthusiasm they have for the fixed market instrument. But now, this week, Treasury bill rates actually came down, and then we're expecting that to reflect on the market. But I'm not sure that it's going to reflect because investors are a bit careful about where they put their funds. But we will always advise that this is the best time for every investor to get in when prices are very low. When prices are low, you buy and you make very good returns in the long term. Though right now, within the short term, we're not going to see much improvement, but it is also an opportunity for investors to come in.
That's one interesting thing about the stock market. When you know, the market is going down, that's when we advise investors to go in. Let's talk about the commodity market. You spoke about BOPP with the oil, you know, price drop affecting it. I can see that the oil prices,
it's still going down.
And
then gold, surprisingly this week, gold actually added
that's
up
good for us.
That's good for us because it's one thing that I actually wanted to talk about. Cocoa also for some time now, I think for the past 4 weeks, has been recording marginal gains, or even sometimes it goes up more than 2%. That is quite impressive because it will help us. Now gold, what is happening is that Anglo Gold says they're going to lay off about 2,000 workers if the prices of gold on the world market continues to drop. And this is one of the things that we look at on the international market. It affects us to just look at the number of people. Currently, our unemployment rate is very high, and if these people are going to be laid off, you can imagine it's going to affect the economy. Their taxes, their little taxes they were paying, is going to go off. Because if they're going to lay them off, what are they going to do? So that is what we
only
advise.
hope that this becomes very sustainable.
Yes.
And going forward, we'll see more of this happening on the commodity markets. But thank you very much.
Okay, thank you. But one last thing, I want to say a very happy birthday to a special person, Hilda and Kuma in Achimoda. Yes, she's celebrating her birthday today. So
I hope Hilda is watching.
Sure, I know she's watching.
Okay. All right. Thank you. Thank you very much, Bertha.
You're welcome.
And that will be all for Business Life today. My name is Abigail Adomako.